Welcome back. Elections are still running in India, and on the 1st of June, we will know who will lead India into the future. In the previous session, we looked at the Indian economy. Another aspect is to consider foreign direct investment, or FDI in short. Now, FDI refers to so-called greenfield investments. So this means that a foreign company goes to India and builds up a production facility or a service company from scratch, or it could be a result of acquisitions. So that means that a foreign company takes over a local Indian company. And of course you have in between joint ventures where you take equity stakes in other businesses. The question I want to address is, does India attract more foreign direct investment? So do you see an inflow of investment, in particular after Modi's government took over? And we will explore this looking at the data provided by United Nations Trade and Development. This, in my view, is the best database if you want to explore foreign direct investment. In addition, you also get excellent data on trade. You can obtain the data as a zip file, so you can unpack it. It tends to be in a CSV format. This works quite well in most statistical software packages. We will do some data wrangling directly in Excel using filters, just to go through the data set. And then we can import just by copy pasting into Stata. We can also, of course, work in Python if we wish. And then, of course, the key question is, what do we look at? What kind of measure do we consider? Because you can obtain various measures of foreign direct investment. You can have it expressed in current US dollars. Of course, then you have an inflation problem, so you need to consider some adjustments. I believe the best measure is to look at FDI, so foreign direct investment, compared to the respective gross domestic product. So this gives you a relative measure of importance. So when we looked at India in the previous session, we saw that the Indian economy, of course, is expanding quite a lot in this period. So if we look at a relative measure, we basically see whether FDI compared to this significant expansion is holding up. So if this ratio FDI to GDP goes up, it means that the relative importance of foreign investment increases. So I now jump into Excel first, and then we go into Stata. So this is the file I downloaded. So when you go to the website, there is a data section where you can select a whole range of measures, and it's straightforward to download these various measures just by clicking on the download button, and you get a zip file which you unpack, and then you obtain a document that can be worked with in Excel. What I have done first is I simply selected my first row. So these are the various variables we have, and then I applied a filter so I can simply go through the data set. What you see is we have various countries, we have inflows, we have outflows of money. So we have basically investment into a country and investment going out of a country, which is another interesting way to explore this. We have flows and stock. So flows are the annual changes, of course, and stock is the cumulated effects. So I will look at flows, I will look at inward investment, and I explore the Indian economy. So after you select that, you can simply obtain the data and move it into Stata, which I have done. And in my Stata do file, I first change my directory. I open my data set, which is in a DTA format. I use the clear option, which simply clears any data in memory, just in case I worked on a different data set. And then let's have a look and explore the data. So I just do BR for browsing. And I have data starting from 1990 going all the way up to 2022. That's the latest. It's always a little bit delayed. I have data for India, and I also have data for China, because that is actually a very interesting case. So it is not a big surprise that in this period, China really dominated international investment. So when you look at foreign direct investment to China, China absorbed virtually all the investment going into Asia. And here we talk about more than 80% of the market. It's absolutely phenomenal. And this has been true for a very long time. Well, we will look at the data and we see what's going on there. Again, I believe in analyzing your own data. Do not trust and believe in things you hear in various media outlets. The best thing to do is just get the data and analyze your own data and discover the actual truth behind all the headlines. So let's look into this. Again, I do only descriptives here. You can do a lot more modeling with FDI data and trade data. There's a whole literature on that. I have done some academic work on this as well, but I just want to keep it really straightforward. If you are new to Stata, I have quite a few videos on getting started in Stata, if you wish. Also, there is a Udemy course on getting started, so just getting into data analysis, and a more advanced one on applied time series. So check them out if you really want to get a lot more out of it and want to go into data analysis. So the first thing I do here is I declare my time dimension. So this is basically telling Stata, hang on, I have a time series here. And then I do a line chart of the FDI going into India over time. And I also indicate with orange color, yeah, nice surprise, the start of Modi's government in 2014. So you see it in the chart. So I'm just running this now. And here we are. And you see that it's quite evident over time the FDI inflow compared to GDP is increasing quite a bit. You also notice that before Modi's government took over, you already had a significant jump in importance. And this coincides roughly with the global financial crisis. So this is quite interesting. In the beginning of a period, there is virtually no FDI inflow. Yeah, and that's indeed a very common pattern in the Indian context. There is almost none. And then it slowly starts taking off. So what we can argue is that since Modi took over, the share of FDI compared to GDP is more or less similar. You know, there are some bumps up and down, but it hasn't really changed that much. Of course, having in mind that in this period, as we discussed, the economy really expands quite substantially. But in relative terms, the foreign investment is not more important. So to a large extent, what you see in the Indian economy is driven by the domestic market. It's a very large domestic market. Lots of investment is happening inside India. And that's the main driver. It's not really the case that you see an awful lot of offshore outsourcing and market entry by foreign companies. So this is not very different compared to previous periods. But this is only one part of the story. The other thing I always tend to do is I look at benchmarking, I compare. And the obvious comparison in this case is of course China, because China is the dominant country in terms of FDI inflows in this period, by far. So when we do this, I look now at both line charts. I do it for India, you see it inside the brackets, and I do it again, separate brackets for China, and I use the two-way command. So here I can plot two different charts on the same. Yeah, so I can have two line charts, I can also combine line charts with a scatter plot or whatever I wish. So here we are, I do that, and this is actually really remarkable here. This is really a fundamental change in the whole setting. So what you clearly see is that China has a massive spike in FDI inflows compared to GDP. Now this early period here, this is really the offshore outsourcing. So lots and lots of foreign companies go to China to outsource their production, mainly driven by cheap labor. Yeah, of course, as we know, China is running out of cheap labor due to demographic changes, and we can also talk about this more. Then you see a sharp drop in relative importance. Yeah, and this drop really continues. You see this going on all the way down, and now it seems to slowly level out. So this is quite a remarkable difference. So in the beginning, you had this offshore outsourcing period. So this is, you call this also a vertical investment. So you slice up the value chain and you outsource production to China. The other driver is what you call horizontal. So you enter the Chinese market to sell your products in China. Now this also happened. However, to be honest, it's not at all easy to make money in the Chinese market. So many companies notice that, and you see a significant slowdown of this type of foreign direct investment. And the remarkable thing is that India in this period simply took over in terms of relative importance to GDP. You have this initial spike, and it's of course volatility is quite high in the time series, but this is what you would expect. And then it remains above the Chinese level. So that is quite remarkable. So going forward, the interesting question is now what will happen? It's unlikely that India will follow the Chinese model of economic growth, and it doesn't make really sense. So focusing too much on manufacturing doesn't make much sense in the Indian context, because India is very, very strong in the service sector. So that's not going to happen. Do you see a reliance when it comes to international investments, or do you need foreign investment to grow? The answer is no. Yeah, not much actually has changed here. So actually what you see in terms of economic expansion is very much driven by a very strong domestic market. Now this is actually not bad news. So this concludes our little exercise here. So I think lots of things are happening here, lots more to discuss. So if you have any further comments, questions, please leave a comment below. Like and subscribe and share the joy of data analysis.